Dinar and Dong updates. A new dawn in currency revaluation. Welcome back to Dinar and Dong updates, where we bring clarity and opportunity together in the ever-evolving world of global currency revaluation. Today's update stands out as one of the most promising and transformative we've seen in a long time. If you currently hold Iraqi Dinar, IQD, or Vietnamese Dong, VND, this is not the time to be distracted. Every moment you invest in understanding this development could impact your financial future in a powerful way. Over recent weeks, mounting evidence suggests that major movements are occurring behind the scenes. Numerous banks are now hinting at what could be the early stages of a global currency realignment. Notably, these changes might not happen all at once. Instead, we're likely to see a phased implementation, starting with a limited group of early participants and gradually expanding to include a broader base of currency holders. This phased strategy offers a practical solution. It would prevent overwhelming the financial system and reduce the risk of market instability. From logistical control to transaction pacing, such a rollout allows banks and governments to monitor liquidity, respond to trends, and maintain economic balance while still enabling participation on a massive scale. Bruce's Intel, a shift in the air. Well-known currency analyst Bruce, speaking via Wise Now, recently shared his observations after watching a press event featuring former President Donald Trump. According to Bruce, the former president made a surprising pivot during a discussion on international trade, teasing a major announcement that, according to Bruce's sources, could bring significant benefits to the American people. One of Bruce's trusted contacts has reportedly indicated that Thursday could be a pivotal day. This insider encouraged people to stay especially alert, noting that something positive and impactful may be in store. This information lines up with what we're hearing from other sources. Banks are no longer simply waiting, they're actively preparing. Conversations with insiders suggest that a number of financial institutions are now laying the groundwork for exchange activity. These aren't mere rumors. Internal procedures are being updated, select clients are being contacted, and internal systems are being calibrated for larger-than-usual transactions. Phased exchanges, the practical path forward. So what exactly would a phased exchange look like? Rather than initiating a global, all-at-once revaluation event, banks and governments might opt for a more controlled and secure approach. Select groups, such as early adopters, institutional clients, or high-net-worth individuals, may be granted access first. These initial exchanges could serve as a proving ground, ensuring everything runs smoothly before expanding access to the wider public. This model serves several purposes. It allows banks to manage liquidity with precision, avoids overwhelming staff and systems, and prevents abrupt shocks to the global economy. Each wave of exchanges would provide data and insight, making it easier to adjust protocols and prevent bottlenecks. What's more, this approach benefits early participants. Some speculation suggests that the first wave of exchangers could receive higher revaluation rates, while later phases might be assigned more stabilized values. This incentivizes readiness and patience, both key traits for navigating this potential financial shift. Ground-level changes in Iraq and Vietnam. On the ground, both Iraq and Vietnam are making strategic moves that point toward stronger participation in the global financial community. Iraq, for instance, has taken major steps in modernizing its banking system. Regulatory reforms, improved transparency, and closer cooperation with neighboring countries in the Gulf have positioned the country for greater financial stability. Higher oil revenues are also providing Iraq with the economic strength needed to support a stronger currency. These improvements aren't just superficial, they lay the foundation for a functional and trusted financial environment. Vietnam, meanwhile, is rapidly emerging as a global manufacturing powerhouse. Its investments in digital infrastructure and growing trade partnerships with the US and Europe point to long-term economic health. Vietnam's increasing role in global supply chains and its growing tech ecosystem are key indicators that its economy is ready to support a more valuable currency. Redemption centers, speculation or reality. One intriguing topic that's gaining traction is the potential role of so-called redemption centers. These specialized locations, if real, would be designed to handle high-volume currency exchanges in a confidential and organized manner. Though their existence remains speculative, many believe they could serve a critical function in the early phases of revaluation, particularly for those holding large amounts of dinar or dong. The idea is that these centers would operate under tight security and by appointment only. Their goal would be to streamline the process and offer a secure environment for large transactions. While official confirmation has not been issued, it's worth keeping an eye out for any communications from banks that may relate to such facilities. A digital financial future. It's also important to consider how the rise of central bank digital currencies, CBDCs, fits into the picture. Both Iraq and Vietnam have shown interest in exploring digital currency technologies. CBDCs could offer a reliable, transparent, and fast way to conduct exchanges, particularly those involving revaluation. A digital system would offer significant advantages: easier tracking, fraud prevention, and rapid settlement of transactions. As the world moves further into digital finance, the presence of CBDCs could smooth out many of the challenges that a traditional currency exchange might present. Digital currencies also offer benefits on a macro scale. Governments and banks can monitor transaction flows, limit fraud, and ensure compliance with international regulations. This adds a level of control and security that would be necessary during a high-stakes transition like a currency revaluation. The importance of preparation. So what does this all mean for individual currency holders? First and foremost, preparation is key. This doesn't mean panic. It means readiness. Take time to organize and verify your currency holdings. Ensure your currency is clean, legible, and authentic. Make sure your identification documents are current and valid. Confirm that your bank accounts are in good standing and ready to receive large deposits. Stay informed through reputable sources, not unverified social media rumors. Many who miss out may do so not because they lacked opportunity, but because they failed to prepare. Some invitations to exchange might arrive through subtle, private means. This could include a direct message from your bank, a phone call from a wealth advisor, or even a secure message in your online banking platform. Be wary of scams. With excitement rising, unfortunately, so does the risk of fraud. It's essential to remain vigilant. Scammers may attempt to exploit the situation by offering fake early access programs or promising premium rates in exchange for upfront payments. Remember, no legitimate bank will ever contact you via social media or demand payment in advance. Stick to official channels, verify all communications, and never let emotion override good judgment. If something feels off, it probably is. Signs of a broader shift. Finally, let's zoom out. What we're witnessing may be more than a localized currency event. This could be part of a coordinated international adjustment, one that involves major global banks, regulators, and national governments. Reports of banks contacting clients to update KYC, know your customer records, and verify large transaction capabilities indicate that something significant is occurring beneath the surface. This isn't just business as usual, it's preparation for a system-wide transition. The revaluation rates being discussed behind closed doors are nothing short of remarkable. While nothing is officially confirmed, there's growing talk of the Iraqi Dinar reaching over $3 per IQD, and the Vietnamese dong landing somewhere between $2 and $3 per VND. If these rates prove accurate, the financial impact on early currency holders could be extraordinary. Final thoughts. Stay calm. Stay ready. This is a moment that demands awareness, discipline, and strategic thinking. Whether or not revaluation happens exactly as anticipated, the convergence of bank readiness, geopolitical developments, economic reforms, and digital technology all suggest we're moving toward something transformative. If you've taken the time to prepare, stay informed, and maintain a calm, focused mindset, you'll be ready when the time comes. Don't expect flashy headlines or viral news stories. The first signs may arrive quietly, perhaps through a private email or phone call. Remain patient, remain alert, remain informed. Your seat is already reserved in what could be one of the most significant financial transitions of our time.